Let's not forget that Apple dumping them has been a huge factor that should have played a big one in the company's performance over the last quarter, and after these earnings, investors are finally starting to realize it. What's going on, guys? We've got tons of stuff to cover today, so hit that like button, put your Heiner in the recliner, and get comfy, ladies and gents. By the way, if you get that reference, comment down below, and I will for sure pin you to the top of the list for whoever gets that one right. Anyways, the stock market is in a bit of a limbo at the moment as Congress tries to agree on terms in a new stimulus deal. With Rona cases still raging on and impacting businesses, jobs, and, well, lives, there have been ongoing developments in discussions for further fiscal stimulus from Washington. Republicans are expected to release details of their plan for the coming days after discussions carried on through last week between White House officials and congressional lawmakers. Republicans last week indicated additional spending would likely be capped at $1 trillion, following the more than $2 trillion included as part of the earlier coronavirus aid relief and economic security, or CARES Act. The initial stimulus is set to expire by the end of this week, and Senator Mitch McConnell has already alluded to the fact that a second stimulus deal may not happen before the current expiration. This includes the $600 per week in enhanced federal unemployment benefits to eligible individuals, which Republican lawmakers have pretty strongly opposed, arguing that too much stimulus will prevent people from wanting to go back to work. Now, as a part of a new plan by Republicans, they are looking to trim the $600 weekly unemployment boost to about 70% of pre-pandemic wages that are not to exceed $600. See where I'm going here? And this has created an impasse with Democratic lawmakers who have pushed to extend this as joblessness remains rampant across the country. Guys, can you believe this? The Democrats are disagreeing with the Republicans. Imagine that. House Speaker Nancy Pelosi has been adamantly opposing this along with other Democrats, and they are seeking to have the existing stimulus package to remain until through the end of January 2021. It'll be interesting to see how the market handles this as a whole, though, because on one hand, we have heard reports that many people who got stimulus checks and larger unemployment benefits have been spending it on pretty dumb stuff. It's a huge reason why brokerages have seen such an increase in retail accounts. Robinhood has added nearly 3.5 million new accounts since the pandemic alone. But on the other hand, there are people who are genuinely struggling, and in my opinion, this is where there could be some real trouble economically, and this will ultimately impact this amazing run the stock market has had up to this point. There won't be any more forbearances on loans, and millions of people are at risk for not paying mortgages or rent, and it just starts a chain reaction of events. Banks wouldn't be able to bring in the revenue we would hope they would bring in, spending will dry up, and there will be an inevitable steep correction if all of this actually happens. So in my opinion, as it relates to your investments, it may be wise to keep a little more cash on the side if this stimulus does in fact get delayed, because it doesn't appear that they're going to be coming to an agreement anytime soon, and certainly not before time runs out on the current stimulus. But I'm very curious about how you feel about this. Are you in the camp that there should be a very limited stimulus this time around and that shelling out more money prolongs progress to getting everyone back to work? Or do you think we should have more stimulus through the end of the year like many are proposing? Or a third option being that there's no additional stimulus at all. In fact, Elon Musk tweeted out another government stimulus package is not in the best interest of the people, in my opinion. Let me know in the comments, as I would love to hear where you guys stand on this. Next, we have AMD, which has literally been shot out of a cannon since last week and capitalized on some of Intel's misfortune. As of this recording, AMD shot up over 20% in the last few trading days, and those of you who are in the Chaos Crew knew she had it in her, did we not? Click the join button if you would like to be a part of the crew, as you will get a daily watch list from me with calls like AMD from around $49 a share. You also get custom-made badges to signify you're part of the Chaos Crew, and it also helps support this channel. It's a pretty sweet deal, and if you're interested, I would love to see you there. So why is AMD all of a sudden flying? A few reasons here. Shares this past Friday soared 16.5% on news that Intel had to delay their launch of its newest processor chips. Investors saw this as an opportunity for AMD to start taking more market share as they debuted their new Ryzen 4000 series processors that are built from an advanced 7nm manufacturing process, much like what Intel was trying to do. Gamers are seeking out the new Ryzen chip like crazy, so demand has already started in on Intel before the company announced the delay. Intel is now struggling here. They recently lost a major contract with Apple, which will soon begin to create its own chips for its Mac computers. Intel's latest delay with its new chips is just another blow that I'm not sure they could have afforded. So is it now too late to hop into AMD at these all-time highs? Normally, I would say there's no reason to be afraid of all-time highs, and I still stand by that, but in this case, I don't see how there could be a good reason to buy AMD now if you haven't already been in it. That being said, I do think that AMD beats its earnings expectations tomorrow after hours at 16 cents per share, but just because a company beats earnings doesn't mean the stock automatically shoots up. If last week's lackluster response to Microsoft and Tesla smashing earnings is any indication to what may happen this week, it may be wise to sit this one out until after earnings come out on AMD after hours on Tuesday. To me, it's just one of those questions that you have to ask yourself about risk being worth the reward, and I'm just not sure that we're there now with AMD as it stands at this moment. I mean, it's jumped almost $25 in a week's time. A healthy pullback and a dip buy is the only play here that makes sense. Two areas that I like are $68 and $65 a share as a short-term support. But what about Intel? Ticker symbol INTC has been seriously beat down here, so is this a great opportunity as well? The stock has tanked over 15% in the last 2 trading days, and in my opinion, don't bet on this getting back over those $60 highs anytime soon. They reported second quarter results last week, and as I had mentioned earlier, the release included the shocking announcement that the company's 7nm processors would be delayed by an approximately 6 months. Those chips were initially scheduled to launch in late 2021, so the delay will push that debut back to 2022. Supposedly, Intel is finally starting to ramp up 10nm production, which was also delayed by years, and honestly, who's trusting that right now? Let's not forget that Apple dumping them has been a huge factor that should have played a big one in the company's performance over the last quarter, and after these earnings, investors are finally starting to realize it. In my opinion, Intel eventually goes lower unless they can figure out how to adapt, much like their surging counterpart is doing. Let me know your thoughts on this, though. Is there a light at the end of the tunnel for Intel, or is AMD the new sheriff in town that's here to stay? Next, there's the upcoming earnings, and the reactions to Microsoft and Tesla's blowout earnings has me worried a little bit about some of the big players this week. Stocks like Amazon, Apple, Facebook, Alphabet, or Google are all set to provide their earnings this week, and I think they absolutely crushed them. But will the market care? Of all of these, I think Amazon has the biggest upside. It's already fallen 10% from its recent highs, and these upcoming earnings should take it to new heights. Should being the key word here. In a world where everyone has been losing their jobs and firing people, Amazon is one of the few companies that is actually hiring people and doing the exact opposite. They've hired 175,000 people since the end of March, to be exact. Facebook has been facing scrutiny from the government as well as private entities, even receiving boycotts from major companies such as Starbucks, Verizon, Unilever, Hershey's, and Ford, just to name a few. In my opinion, though, I don't think this makes a dent in their earnings on Thursday, and Facebook will be just fine without them. After all, there's 8 million other businesses that love using Facebook to promote them, and it's hands down the best return on investment you can get as far as ad spend is concerned. The bottom line here for big tech is this. We are in one of the biggest, if not the biggest, economic contractions we have ever seen as a country and even the world. And the fact of the matter is that these companies have not only survived, but they are thriving through this. It's not a bubble, as some analysts want to point out. In 2000, during the dot-com bubble, companies were going nuts that didn't even have businesses. Nothing on their balance sheets whatsoever. It's completely different this time in that they are legitimately growing and growing very fast. Amazon, Google, Facebook, and the rest of the FANG stocks and big tech is only going to get bigger. And so you'll have to ask yourself if you're going to still wait around for this supposed bubble that's going to burst, or are you going to see what's really going on here? And that is the final thing that I would like to hear from you. Are we actually in a bubble, or are we just getting started? Let me know in the comments, guys. And if you happen to miss a Stock Watch Sunday last night, click this video here. Or if you want to know about all of my favorite indicators that I use every single day, click this video here. Please like and subscribe. And as always, folks, I will see you all before the bell. And B. Smith is out.